All right, guys, welcome back. Welcome back. Hope you guys had a fantastic day out there. What is going on with these markets right now? The S&P, of course, is trending higher this afternoon. Nasdaq is all chopped up in a sideways range. That means we have two different strategies for tomorrow. But I'll tell you, S&P, Nasdaq, they both have one thing in common. We'll talk about that tonight. I have a number of good trades I'm tracking for finally Friday. By the time we're done tonight's video, you'll have an easy roadmap to make some money to finish up the week in the green. Now, before we jump in to my favorite trades here for tomorrow, make sure you subscribe to our channel. I don't want you to miss tomorrow night's video, so make sure you subscribe. And if you enjoy these videos, if you like these lessons, hit that like button for me. Give me a shout out down in the comments section below. Thank you so much for tuning in tonight, supporting our channel. Enough of the intro, though. Let's go find some more winning trades to finish up the week in the green. Boy, charts are all ready in front of me. Nasdaq triple Qs are ready. The Emini and the SPY is ready. I have only real two important clues right now on these charts tonight that are telling us where the winning trades are going to be for Friday morning's trading session. One of those clues is right here on the 60-minute. We are bullish, but look at how way high up we are on the S&P. Bullish, and way high up we are on the Nasdaq. Bull market, way high up on the 60-minute time frame. That is a very important clue, but it's only one of the two important clues. We're going to drill down in a moment to our tick charts. I have one more important clue on the tick charts that will bring this all together tonight, because we don't trade off a 60-minute time frame. It's good for direction. It's good for big picture. But we'll drill down to some tick charts and talk faster time frames and entry tactics here in a moment. Before we do that, though, let's look at our schedule for tomorrow, because tomorrow is a Friday morning, and tomorrow we have really two things on my radar. First is the consumer sentiment number coming out at 10 o'clock Eastern time. We haven't had any news all week. The only news we have tomorrow to worry about is that consumer sentiment. Anytime we have big news at 10 o'clock Eastern time, you want to be paying attention. More importantly, tomorrow is a Friday. Friday mornings mean the Friday mindset. Most of you guys and gals know this already, but if you're here for the first time tonight, Fridays are not like any other day of the week. Markets get illiquid. They get lower volume. They do things they don't normally do on a Friday afternoon. Also, too, we humans, we traders, we are not at our best on a Friday afternoon. So my mindset on a Friday morning is to get in early when the markets are good, when I'm at my best, take some profit, remove risk early, but I always like to leave a runner on Friday afternoons, because Fridays love to run. Why? Because Fridays get illiquid. The volume dries up into the week. So again, Friday mindset, early in when I'm at my best and the markets are good, remove risk, take some profit, and always leave a little piece to run, because go back and look for yourself. 3 out of 5 Fridays, they love to make these big runs in the afternoon. So be aware of that consumer sentiment tomorrow morning at 10 o'clock Eastern time. You'll want to be paying attention at 10 a.m. tomorrow. And again, Friday mindset, early in, not so much early out, but early in, take profit quickly, remove risk quickly, and leave that runner. Now, back to our charts, because it's good to know the mindset for tomorrow, but the money is made on the charts. Let's now look at my favorite trades here for tomorrow. We have two very different strategies tonight. We'll go to the S&P first, and we'll wrap things up the Nasdaq a bit later on in the video. I mentioned earlier there are two important clues right now on these charts. One of the clues is this bullish overall market, but man, oh man, are we way high up on this 60-minute time frame. Let's now drill down to our tick charts, because this is where the action happens every day in our trade room. We don't trade off time charts in our trade room. This, by the way, is a 7,000 tick chart in the upper left-hand corner. And if you're watching for the first time right now, welcome to the channel. This is the 21 EMA. Pretty much the only indicator we need to find lots of winners every week in our trade room at 8 o'clock Eastern time. There's one more important clue right now on these tick charts, and they are measured moves. Measured moves. Now, really what they are is we've got two ranges on the chart. One range down bottom, and anytime we have a range breakout, the breakout leg is used as a measuring leg. That creates a measured move resistance up over overhead. Another range is right here. Anytime we see a range breakout, the breakout leg is a measuring leg. So there's no doubt about it. We're very bullish right now, but we are way high up right now on the 60-minute time frame. And it appears that we are running into multiple levels of resistance up overhead. Now, in most cases, when I'm way high up into overhead resistance on a bullish market overall, I want to buy a two-legged pullback. We saw an example of that two-legged pullback earlier on in the week. I guess watching this all week this week. So I want to buy a two-legged pullback right now. But I'll tell you right now, during that two-legged pullback, I have two different types of bull traps I would love to pick off this top right now. One of them is called a crown reversal pattern. Crown reversal patterns are simple. It's a lower low in price and a little bit move above that prior high. What's happening right here is the buyers will come in and buy once, buy twice. This is not a great place to be buying, right? I realize we've gone up and up and up the past couple days here, but eventually these buyers will run out of bullets, and I hopefully will get some rookies trapped in there with a crown reversal. Get those buyers once, get those buyers twice. Now think about this. If you're trapped long up there, where are your stops? Your stops are right below that low. So a strong red candle closing below that 21 EMA is an easy signal there for one of my favorite bull traps off the high. That's one of them. The other one is a V-top. Sometimes we don't get the buyers trapped in up here and the market basically collapses back down. Another one of my favorite bull traps is we call a V-top reversal. I'm going to go out and draw a trend line off these lows. I'm going to bring it up around that high. And then as we always say, look left, find some prior swings. And I love to grab that bull trap pattern off of that high of that channel. Notice how I draw the channel right off the lows up around that high. And I'll tell you right now, this is almost a guaranteed winner when it rolls over like that and begins to run going lower. So again, we're way high up right now in a bull market. I like the idea of buying a two-legged pullback, and during that pullback, I've got my eyes on two different types of bull traps. A crown reversal pattern was the first one, and this one is a V-top or a pop and grind going lower here. Now, once we get down into that two-legged pullback, this is kind of where the fun begins, right? Do we keep on rolling all the way over? Because that ranges love to rotate, the amount above, the amount below. So if the bears really get cooking tomorrow, it may roll all the way back down and take out some of these lows down here, which still have not been taken out from earlier on in the week. Now think about this, for example, here. Think about this. If we get that two-legged pullback on the way down, at this point now, if we start rolling and continuing going lower here, I'm going to do it again. I'm going to grab a trend off the lows, up around these highs here, and I'll do it again, right? I'll go in and look for that pullback and that short coming in off of that high. What is very feasible here, in this scenario is to get that two-legged pullback, right? It goes back into that trading range. We're way, way high up on the 60-minute time frame. We begin to roll and roll and roll. Again, mark that trend line lows up around that high, and this will usually be some sort of bull trap pattern, right, like this, or oftentimes it'll get above the 21 EMA. That's where failure patterns live. Buyers try to get long. We short into their stops with a failure pattern. Failure patterns turn into pullback patterns called the price action cycle. You guys are learning in the free trading course on the way lower. Now, what oftentimes happens in these scenarios is we get all of that momentum rolling lower. We can get that bull trap, that buyer failure short on the way down. But then once we go back and retest the low, remember, now we're nice and low. Now we can buy low down here because, again, we're an overall bull market. And you do that by using one of those failure into bear trap combinations we talked about so much earlier on in the videos here this week. So think about this sequence. Think about this sequence as we go lower here. Again, I'm looking for that pop up, those bull traps right off of the high. Okay, if it does roll over and starts to drop off this high now, all of that momentum now coming off that high. I want to short that first test off the high of that channel. Could be a bull trap pattern like I'm showing you here. Could be a buyer failure pattern. It could be a pullback combination. And remember, whenever we have a bull market that rolls all the way over and then retest that low, this is now where buyers will come in and start picking off those lows with that failure pattern into, of course, what I call a bear trap combination. Now, let's slow down for a second because I know most of you guys watching right now, you know traps, failures, these pop and grind channels. But if you're watching for the first time right now, this might be a brand new language for you. Don't you worry. I teach all these entry patterns. I have hundreds of examples of pop and grinds and bull traps, bear traps, and a whole lot more. I teach all this in a lot more detail in our free video classes. I'll put a link up top here for you, upper right-hand corner. Hit that link that popped up there. Take that free trading course because the strategy you'll learn in that short video series will teach you a simple trick we use in our members trade room to know exactly where the best winning trades are going to be each day. But more importantly though, I'm going to teach you how to time the perfect entry for my favorite entry patterns. You'll learn failures. You'll definitely learn traps. It's all included in that free video course. Guys, the markets are way too good right now. If you're not making consistent money, if you're missing the best trades each day, if you're struggling to qualify for a funded account at Apex or Top Step, hit that link, take that free course. Perfect for someone trying to make the jump into full-time trading because you'll learn the roadmap we use every day in our trade room, right? Also, too, be aware, too, I'm going to put all the important links tonight, the description of the YouTube video, put the free class links down there, our trade room membership links, I'll put that in the description as well. And also, too, I post a lot of updates on Twitter or X during the day. If you're on X or Twitter, give me a follow, all the details, description of the YouTube video. So that's where you can go to learn more inside that free trading course. Now, we mentioned earlier those two types of bull traps off the high. And again, I want to buy that two-legged pullback. Now, we mentioned before, if the market rolls over and keeps going, right, we look for that new channel, we short that pullback off that channel, and then we grab that double bottom, right, that failure into bear trap going higher. That's the essence of that kind of bull trap off the high. But remember, we may not roll much lower here, right? We may only get, remember I said earlier, in these situations, I don't want to buy high, I want to buy low. And to do that, I want to buy a two-legged pullback. So how would I buy right there? Well, remember, I have no crystal ball, right? I don't know. This may keep on rolling all the way down. So what I'd like to do is, if I can get this thing to roll lower and start holding off these areas of support, see now, this is not a great place to sell short. I like the bull trap short above, but I'm not a big fan of selling down here, right? If it keeps going, then yes, then I can sell that bounce and back down again, but not a great place to sell short right there. So if I can get some rookies coming in and get those bears trying once, trying twice, this is where we get that failure pattern. We call these failure patterns in our trade room. You guys will learn more about this in the free video class, right? So a failure pattern, a two-try failure, like over there, right? A failure pattern, and then of course into, we call a technical bear trap. Remember, in a bull market that's way high up like this, the buyers want to buy nice and low. Again, think about that two-legged pullback. And when I say two-legged pullbacks, it's a bit more than a measured move. So now we're sitting at support. Do we get the rookie bears? Do they come in, try once, try twice? If they do, I can use their stop losses right here to buy into those stops. So like back here, right? Back there, we see, right? There is that two-legged pullback. There's the bears once, twice, right? And there's that squeeze going higher. Same thing here, right? Get that two-legged pullback. If we then start seeing, because again, I don't know what will happen right there. It may keep on rolling over. And if it does, we know short the bounce, right? And buy that double bottom retest. We also know too, though, if they hold 1 and 2, now the rookie bears are trapped, and now we can buy into those stop losses with our failure pattern. And then as we go higher here, the buyers want to go where? The buyers want to go back to where? To retest the high. It's a bull market overall, big move up, two-legged pullback, and a retest of that high. How do we buy this thing or add to our position as we go higher? It's always going to be that bear trap pattern. It's a higher high in price, and again, it's a trap right below that low. And again, this might be all brand new to you right now. So if you're here for the first time today, take that free video course. I mentioned earlier, a lot more examples, and the rules are covered all in that free video course for failure patterns and, of course, trap patterns. Now, once we get back to retest the high, we are still way high up again. So think about those same two bull traps up there, right? That crown reversal, which was that lower low, higher high, crown reversal there, or again, it could be that V-top grinds back down, find that channel, right? And then again, look left, find some prior swings, and you want that first test off the high of that channel. We see a lot of those in the trade room, a lot of examples of that covered inside the free video course, right? So that's how I want to trade this right now. The most important thing right now is I do not want to buy high. I don't want to buy high. Now, here's a question for you. What if we get stuck up here? What if this market turns sideways here and begins to go sideways? What do we do in that scenario? Good question. The Nasdaq will help us time the entry on that. Let's get the Nasdaq going here. Nasdaq is almost a completely different market right now. Well, I shouldn't say that. We're definitely bullish overall right now. We're way high up after that non-farm payroll blast we saw last week. But again, we're not going to trade off a time chart. We always trade off tick charts. And then, yuck, look at this chart right now. What a mess in front of us. The most important thing that you want to understand about the Nasdaq right now, the Nasdaq is bullish. We get that big run going higher. There's that two-legged pullback we mentioned before, right? Remember, anytime we see a big move like that, two-legged pullback and a retest of the high. So we know where the market wants to get to on the Nasdaq right now, but now we've got a range basically right in the middle of this chart. Right now, ranges. What do we know about ranges? Ranges are magnets, and they like to rotate back and forth. We go down, up, down, up, down, up. Right? Makes sense, right? They rotate back and forth. Now, if we understand that ranges like to rotate, I'm going to sell off the highs. I'm going to buy off the lows, right? Okay, now, remember, we're a bullish overall market. So the way that I sell off the high is a bit different than the way I buy off the low. So let's talk about that, for example. So if I go higher here, for example, right? If I go higher, remember, we're bullish overall right now, so I have to be a little bit more careful looking for a short off the high. This is where that crown reversal comes in handy. Again, buyers once, buyers twice, trap those buyers in and use stops to fuel that run back down. We call these crown reversals. They're basically bull traps that we teach in the free video course. Or we may go up. Remember, range. Think about that breakout into a measure move there, right? So keep that in mind. That's why I left that up there on that chart. We may get that breakout into a measure move top here. We may get whacked right back down and begin to grind back down. These are one of the easiest ones because, again, you'll know the giveaway when it grinds down like that. Mark off that low. Pin up around that high, go looking left, find a prior swing, and man, oh man, that is, again, these are almost guaranteed winners when you get that V-top and it grinds back down. Could be a bull trap like we're showing you here, could be a buyer failure, a pullback combination. Again, that will make a lot more sense once you guys are in the free video course. So we want to sell off the high, but to sell off the high, we have to use bull traps off the high. Now, if we understand the market wants to rotate back and forth, how do we buy down here? Good question. Look back what happened earlier on in the week this week. When we end up back at those lows now, this is where we expect buyers to want to come back in and re-enter this market and rotate back up into that range again. Now, as always, I can't pick the bottom, right? I'm not going to pick a bottom. I'm not going to blindly buy into that. What I'll do is I'm going to wait for the price to pull back. Once I start seeing rookies chase after it once and twice, I'm going to use their stops to fuel that run going higher. Now, notice the difference between the entry techniques, right? It's a crown reversal. It's a more selective short. It's basically a technical bull trap off the high. That's a technical bull trap. You'll learn more about that in the free video course. It has to be a bull trap to short off the high in a bull market. But as we go lower, we're overall bullish. We have to assume there's a lot of buyers waiting down here because we're so bullish overall. And because of that, I always look for that rundown. I don't pick the bottom. I wait for the bears to come in, try once, try twice, and we squeeze those stops, right, and squeeze it back up again. Now remember, oftentimes when markets rotate off the high like this, right, that's a lot of momentum. So don't be surprised if we get a pop up, we get our 1-to-1 first target, stop moves up to point of entry, but now we don't get that full rotation back higher again. We hold the underbelly, right, of this range here, and we make another run back down again. Now, this is not a reversal. It will take a lot more than this to be a full reversal. We saw how big that move up was on the 60-minute time frame, right? So when they go back to retest a low, I want you to think about who sold, right? Who sold short up here, right? Professionals sell high. If you sold short up there, where would your profit target be? Be right back down around that low. So first of all, anybody who sells high up here, they become buyers now down at that low. So now we have long-term buyers buying low on the 60-minute time frame, and now we have any short-term sellers. They also become a buyer down there as well. Okay, this is a great place to be a buyer. The hard part is I can't pick that bottom. You know, for all I know, it'll be here. I don't know how far it'll go to that low. But once we take out that low, though, then bring that 21 EMA back in again and watch closely. It's a failure. Again, 2 tries. Why 2 tries? Because I need those bears trapped. I need their stops to fuel that move, like back over here, right? Trap those bears in and squeeze that sucker back up again. Once those bears are trapped, now, remember, always going to be that failure into that trap combination. Okay, there are a lot of variations of this, but this is the simplest way to teach it here in the video. I can't cover everything in these videos, obviously, but that's the easiest way to look for it. These are my favorite ways. You know, again, we call these double bottoms. We run lower, we trap the bears in. Hopefully, we get that rip right back higher again, right, like we saw earlier on in the week. But be prepared, though. I'll be taking some profit off, again, at the underbelly of that move. Take my half off there, quarter off there, right? If they do roll it over and retest the low, now we go in, we do it again. We get a second bite at the apple, trap the bears in, and then speaking of traps, this is a failure pattern, right? Not a technical trap pattern. The technical trap pattern comes over here, all right? And you'll learn more about what I mean by a technical trap versus a failure pattern inside the free video course, right? Now again, remember, ranges want to rotate back and forth, right? So if we can get a long here off that bottom tomorrow, leave that runner, right? Because it could squeeze and keep going up and up and up into the end of the day on Friday, right, guys? So that's the game plan in a range-bound market. Now, the one other scenario is if I'm wrong about this and this thing starts to rip higher here, what do we do if we rip higher going higher? I mean, you know, again, we're overall bullish. If we rip higher, now this range becomes a breakout pullback, all right? A breakout pullback. Now, if you recall back on the S&P, I mentioned if we wind up way, way high up here like that, I don't want to buy up there, do I? I want to buy low. How do you buy low? You buy a 2-legged pullback. You get under the moving average, you go a bit more than a measured move, right? A bit more than a measured move, a bit more. I know I repeat myself a lot, but it's repetition is the way trading works, right? A bit more than a measured move. And again, right, for all I know, it'll keep on going lower. And if it does end up rolling and grinding down, bingo, channel off the low, off the high, right? Find that swing and don't miss that first test. But most of the time, if we run up, get that 2-legged pullback, we're going to start holding prior highs. And again, we're going to wait for that pullback to the moving average now and look for that same failure. 1, 2 tries, rope in those bears, run those stops. And when those stops get squeezed, where does the market want to go? It wants to go back up and take out that high. On the way up to it, it's always my job to buy as low as I can. And we buy as low as we can by using a technical bear trap. So again, if this thing rips higher tomorrow, which it would be a bit surprising because we're way, way high up right now, but who knows, right? Big CPI number coming next week. We may keep on grinding here tomorrow morning. If we do see it keep on ripping higher here, now we go out, look for that 2-legged pullback. Again, don't pick the bottom on it. Trap the bears in, failure pattern, and look for that bear trap pattern as we go. And also, too, I'm sure some folks are wondering right now, wait a second. If I pop up like this, Could I grab that? Could I grab that crown reversal off the high? Could I pop up and get a V top off the high? We can. Just remember though, if we pop up like this, if we really rip higher like this, the odds of a pullback and a retest are very good. So when I try to short one of those things, it's a half size position, it's a quarter size position, right? So it's a smaller position size if we pop way up like that, right? I try not to use a full size position when you're going against all that momentum, right? So crown reversals can work up here, but again, they're not going to be as high percentage than if we say head fake off the high, 1, 2, back down, right? Big difference there between shorting this one and trying to short into a strong run going higher. So be careful trying to short those pops like that, right? Better off waiting for the two-legged pullback, trap the bears in, and back up to retest the high. All right, guys, as you can see, a lot of nuance to trading tomorrow morning. Now, that's the game plan for tonight. Tomorrow, 8 o'clock Eastern time. Guys, the best way to make consistent money in these markets is to come out and do it with me every morning in our trade room. We trade together 8 o'clock Eastern time. Hopefully, I will see you there trading right along with us. I would definitely recommend start first with the free video classes, learn the fundamentals, learn how the system works, and I'm sure sometimes we'll see you trading with us sometime soon in the morning trade room as a member. Guys, hope you learned a bunch tonight on the video. Hope you use this knowledge to make a bunch tomorrow. Let's finish up a great week with some more green on Friday morning. In the meantime, be well, be nice to each other out there, and you better be here next time. Adios, amigos. Bye for now.